Yo, what's up? Sorry, my dog is going crazy in the background. So this video is in particular, I wanted to respond to people. Like four people commented on my request saying they wanted to talk a little bit about risk management, unusual whales, and how those things can work together. If you've been following me for a while, you know I'm pretty diligent about tracking my trades, not just the wins, but also the losses, right? Good or bad, showing why and how they happen. So I'm actually going to use two trades that I took today to kind of show risk management positioning, risk management style, and one of them how I use the whales tool and charting to help me. In another one, how I didn't and how it hurt me, right? I have no shame in saying that sometimes in the heat of the moment, discipline gets tossed out the window. You think the Palantir is supposed to be a $50 stock. It's down at like $12. You make some bad choices. I bully Palantir a lot in these videos. But anyway, so I want to talk about three specific things. The first thing I want to talk about is risk management, sizing, expiration choice on entry. So what I'm looking for is degrees of confidence when I'm deciding to enter a trade. The first part of this, we're going to go from macro to micro, is you're going to want to look at market behavior. So today, what we saw was a shitty market, right? We're blood red all over the board. So the first thing I'm looking for a degree of confidence is I'm saying to myself, what stocks seem to be outperforming the current price action? So if I'm digging back through the day, looking at Wells Fargo, I'm seeing right around the time I entered. Let me show you right around the time I entered first. I got into Wells Fargo here at this trigger break. I'm going to highlight the candle for you. I got into Wells Fargo here. It was about 10 o'clock. So the reason why I got into Wells Fargo, we're going to go through the degrees of confidence. The first thing that I saw that I liked was that there was all this buying happening of calls. You see call by, call by, call by, call by. While the index was, I believe that the one it's part of, I mean, SPY was down like 1.2%. Dow was down, which banking probably be a part of, like 1.3%, something like that. And I see people buying calls. So to me, what that says is this is a play that I can kind of trust. The next thing I'm going to go to for a degree of confidence is I'm going to look at the quick view. I'm going to see if people are buying this week outside the money. I see the 1223.48 very high outside the money with 5,405 volume. 1451 OI. I see a similar thing happening with the 47. I even see some action growing on the 48. I also see that 44 getting some run, but I also know that that probably was in reaction to the slide this morning. So degree of confidence, one, I'm seeing good flow. Degree of confidence, two, I'm seeing a lot of outside the money activity. And I'm seeing all this, remember, on the macro scale, while the stock market itself is not in favorable conditions for this. So that's part one. I say, okay, I like this play. It's divergent from the market action. This is one that I'm going to have a high degree of confidence in. What does my chart say for entry? So if you've watched in the Yeet, we've shown a lot of videos about how to create triggers. So for now, I'm just going to go with the assumption that you understand what a trigger is. If you don't, please start with the Yeet number, I think 28 or 29, the yeet.substack.com, or just poke around this YouTube channel and we have it. So right here is where I entered. This is my trigger level. And this is where I decided to enter the play when it crossed and retested here on the 5 minute. So the second part of risk management, right? We know that we like the trade. Now the question becomes, and this was my entry right about here. Now the question becomes, what kind of sizing, what kind of expiration am I going to go with? Now, it's Monday. In a market that was favorable, I'm probably going to go with something this week, right? I still got a little bit of cowboy in me from WSB. And I'll go with something expiring Friday, close to the money, right? We saw those 48s and 47s getting that call action on unusual whales. I'm going to play it safe and not too crazy, and I'm going to go with the 47. I always like to kind of, I don't really like to follow the whale too much outside the money. That's just pure gambling. Um, so here when I've entered, I've got my trigger break, I've got my retest, the stock is going up. But the other thing that you want to look at is with the market conditions being what they are, even though I have this divergent unusual whales flow, even though I have this trigger break, the smart move is to go for something expiring the week after next. Let me tell you why. It's not only because you want to be careful in this market, but it's because you might want to do a swing. And the best time to do these swings are when your trigger has a big gap, long candle in the price action. So what I'm looking at, once my trigger breaks here on the green line, is I see this from the green line up to here as my potential movement, right? That's a nice movement. That's movement up to 48. So why not put a little bit of time on the contract, go the next week out or even the monthly, and give yourself time to fill that gap? That's what a lot of people don't understand about making good money in options, is that they think the day trade where you hit the 100% in 5 minutes is all that it's about. But here, that goes past 48 over the course of the next week. Then, I'm looking at over 100% potentially. And the other part of that is because that distance is so far and it's a swing, if I put time on it, now I'm not as concerned about the up and down swings in the market if I've got a monthly, if I've got something a couple weeks out, right? Like every single red day doesn't kill me. I mean, it's not great, but you can survive it. So I guess that's example one I wanted to show. Just to clarify degrees of confidence, right? You want to be showing that the flow is in your favor if the market's green, for example, if you're bullish, or it's diverging. Second degree confidence is that you want to see that there's activity around those outside the money strikes that are close. The third degree of confidence is that your trigger breaks, and that's a trade that you can enter. And then when it comes to figuring out what you want to enter, what your positioning is, you want to play it safe in a down market. And you also want to play it safe if you got a lot of room to run, play it for a swing, put a little bit of time with more than a week out or something like that. Obviously, do what I say, not what I do, right? I sometimes take things lower. Now let's talk about risk management in the sense of when am I going to get out the play? When am I in trouble? What I use for that is typically just the 15-minute chart. I make my triggers on the hourly. I find my retests on the 5-minute or my trigger breaks on the 5-minute. And then I do my trends. I mean, this one's a little messy. I apologize. And then I do my trends on the 15-minute. That gives things time to develop for me to see what's happening. And then that lets me know if I'm staying in the trade. So here, around where I got in, I saw that it hit this trigger, right? It hit my trigger line again. So that was my first point of, right? So that was my first point of whatever you want to call it. So I see that kind of steadily climbing here. And then for me, what I'm looking for as far as risk management, look at that. Higher lows. And then trying to push through this next target at 47. But what I'm looking for is 2 candle closes, and I mean full closes, not half closes, outside of my trend line, then that's when I'm out to play, if I really like it for a swing. If it's a short-term play, like a weekly outside the money that I'm playing, I'm going to wait for one trend line break under the trend there. So actually, if I pull this in, right? So you see where this is? Right here. So I'm on the 15-minute now, and I've got this one going out beneath, this one going out beneath. So if I was actually being diligent, then this is the point that I'm saying it's time for me to get out that trade. This actually happened literally in the after hours, so there wasn't anything I could do about that. I couldn't get out the trade. But if you take it to the point that was during the trading hours, you could see that it helped that trend, right? And this break happened after hours, so it's not like you can exit options trade after hours. So to me, that's a good sign. And then just additionally, what you're seeing for tomorrow is all these supports and resistances. So if we get above 47 tomorrow, Wells Fargo's flying. So that's when I decided to get in or out. Trend line on the 15, keep it going up. The other thing that you can look for using unusual whales, which I didn't do. So I actually found out I did the wrong trigger for Cisco. I was really tired. It made it like 2 a.m. last night, and I paid the price today. So sorry if you paid the price with me too. One easy thing that I could have seen, I was in the put play. What I always try to do is keep updating the flow and looking throughout the day to see what the activity is. So after I bought it this morning, you can immediately see that all of a sudden calls started flooding in, right? Calls. So you can use your trend lines, but another thing you could easily do is just monitor the flow, and it's not complicated. If all of a sudden things are turning from bearish, right? I bought it when it was bearish. I think it was like 75% bearish, and I'm watching this pie chart as I check it on my 15-minute trend line, and I see that this is increasing in bullishness. It's time for me to get out that trade. I would say that for me, it's about once things swing within 25% of where you're at. And the reason why I say 25% is because sometimes larger orders can come through that skew things, right? But 25% is usually a pretty good measurement. So kind of review. Number one, I'm looking for 3 or 4 levels to support my entry for what I want to do for sizing. The more of those confidence factors I have, the better. The second thing that I'm going to do is I'm going to switch from my hourly or my 5-minute to my 15-minute to monitor the trend line. If a trend line breaks with the full candle close beneath on a weekly, I'm out. 2 candle closes beneath on something that's a further out weekly or monthly, I'm out. And then finally, I'm making sure that I monitor what the flow is going for me. If it moves 25% against me, then I'm out with the trade. You're going to miss out on money with this. I'm not going to lie, but everyone has to have a rule. What is that? As Omar says in The Wire, the man's got to have a code. All right, cool. So that's that. I'm going to make this money on Wells Fargo and then probably flush it on some SPY 0 DTEs on Wednesday. Gambler status. All right, later.